Hello, Slopers. Brian Johnson here from thestockminer.com. Just filling in, trying to help out Tim here. It's been a long time since I've done a video. So I'm still lurking. Still lurking about for those of you that are Bugs Bunny slash Daffy Duck type fans. You'll know exactly where that line comes from. Anyway, still lurking about and watching all the posts, really, and still enjoy the site itself. And since Tim is on vacation, thought maybe I'd do a little bit of contributing to the site. And we'll probably be doing more of it. I've got all my updates and everything done to what I need to be doing, so I can focus on outside material as well. And helping Tim is always a joy because he really appreciate the work that he does. Still think he has one of the better sites out there on the web. So anyway, there you go, Tim. Enough of the butt kissing. Let's move on to the markets. Here we are with the Dow. I'm going to give you guys a little wrap up of today's activity and where we are at currently. Here you've seen this long consolidation, sideways, 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 choppy moves. We've hit highs and lows, coming back now up into overhead resistance. Now, I want to show you that some of the other indices have already managed to break out and above some of these levels I've been watching here for a while. The Dow has not done it, however. In the after hours, we did see a little bit of a spike, so we may see a little bit of a gap in the morning. If you can't beat it, gap it, and we might see that coming into tomorrow. So for all you Elliotticians out there, is this a 1, 2, 3? Is it an ABC? If we get a gap up tomorrow, would make itself out to look like a pretty nice 3 to the upside. Also a double bottom would then be confirmed, and we would be on our way to some higher prices. Don't know how much higher that will technically get, as we'll see when we get into some of the deeper charts. Anyway, 12,200 is one of the areas I'm watching very closely tomorrow. That will then clear the 200 period moving average on the 60-minute charts, and you'll also see what it does for the dailies. Anyway, that's a good trade. I think there's a pretty decent opportunity to get in on a little bit of that. You have to be very careful, though, for those of you, if we see a gap up tomorrow above 12,200, that doesn't mean, oh, hey, go long right away at the open. Then you have to be cautious. What I like to see in my entries is start somewhere here, whatever, I don't care, and then run up and through those areas, or move down and through my entry areas. I don't like trying to play things off of a gap, so we'll watch that tomorrow. However, if we do gap up tomorrow and then move down, try to fill that gap, or come back into the 12,200 mark, look and watch closely for a hold of that area. I'll also try to do some intraday updates for you guys too, if at all possible. Anyway, moving on to the Dow Daily. Here we go. There's that consolidation. See it pretty clean here on the daily. Keeping in mind, we haven't ever tested the 200-day moving average on the Dow yet. Not a big deal, but you'll see that a lot of the other indices have. This is just what you get with a big monster like the Dow. It just takes it a while to turn this big boat around and move it one way or the other. Point being, look, 12,200, I likey. Okay? It's a nice entry. Something to be thinking about coming into tomorrow on your trading scale if you like to trade the indices. So anyway, point is consolidation down here. We can make this into a half a dozen different millions of Elliott wave counts. I'm not going to worry about that. I just really believe we break this area here. It's a good short. We break this area here. It's a good long. The consolidation usually gives us very well-defined areas to work from. The next thing to work on then for traders is patience. Yes, patience. It becomes very difficult to wait this long for something to happen. You want to jump in, you want to make a rash decision. That's usually when you blow up your accounts. NASDAQ 60-minute, here is that little line we've been seeing. Above 2260 was an area I watched very closely this morning. Took a trade there, and into this 2280 area was where my overhead target was at. That was the 200. We pierced that and are now into even some further overhead resistance. Let's move on and take a look at the daily. You can see above the 200 was it was trapped between the 200 and the 20. Notice the consolidation moving sideways as the rest of the markets have. This one very clean in its break. This is the NDX. That is the NASDAQ 100 strongest stocks. Going back to the 60-minute, you can see above that 2260 mark was here, and if we flip to the daily, that was also above then the 20-day moving average. We did not manage to close above it yesterday, and if you can't beat it, you gap it. Right, we gapped the 20-day today, moved our way straight up from there as it held. It's a very strong move by the bulls in the NASDAQ. I'm not real excited about the volume, but to be quite honest, I don't care right now about the volume. I'm just watching price action. Price action's up. So you can see here we've cleared this area coming into some further overhead resistance areas. This will be another one to watch tomorrow. Entries then above 2280. We could definitely see some 2310, 2320, which is ultimately one of my bigger targets to the upside here, which coincides with the 50-day moving average. Something to keep in mind for you as well coming into tomorrow's trading. Here is the bigger look on a weekly time frame. Going all the way back to December. Look, we've gone, nowhere. Really, we've gone nowhere. It might give you the appearance of your 401ks have been growing, but in most cases, the reason your 401ks have been growing is because you have been contributing to them since December, which gives you the appearance of you've actually been moving up in the markets. Some funds have, not saying everything has moved sideways, but as a general rule, if you look at mutual funds overall, you'll see that most of them have moved sideways since December. So, point being, very clearly defined here, you have this drop to the lower side. I love this below 2180 on a bigger time frame and above 2400 on a long time frame. Trap between the 20-week and the 50-week moving averages. Yes, people are going to try to make this into some really large head and shoulders pattern. That is valid. I can see the point there. However, do not get sold on that. Just because it could be forming a right shoulder here doesn't really mean much. So you want confirmation. Just keep it in the back of your mind. Hey, there's a potential head and shoulders on the weekly, and let's give this thing some time to actually work its way out and see what's going to happen. SPX 60-minute, you can see it moving up and into this overhead area. We did not break these overhead areas. We have on the Russells, we have on the NASDAQ, which are strong places to be looking for bounces, and that's what you want to see. You want to see them leading the way. Have not reached that yet with the Dow and or really the SPX, but it could be just a matter of time. Once again, if you can't beat it, gap it. Watch for that tomorrow morning. I like this up above 1300. That has been one of the levels we've been watching very closely. Back below 1260 for your short. There's that sideways consolidation. Very clean as well on the SPX daily. But I want to bring this to your attention. We have tested the 200 not once but twice down here, and it held very nicely. We are now back up and above. More importantly, closed above the 20-day moving average. Here's what I want to bring to your attention. If we drew a line from here to here and we put a line from here to here, what do we have? Yes, we have a channel, but that is actually the formation of a anyone Bueller bear flag. So we are not out of the woods yet, pun intended, for the bears. The bears still have control down here. They've done a very nice job of holding this back. Wave 3, a typical wave 3 to the upside, usually, well, in almost all cases, I should say, will infer some sort of a formation as what we're seeing here, bear flag, followed by a break of that bear flag. So a failed formation, if you will, where it'll break up and above that area. So we'll be watching that closely. I don't have those lines drawn in, but I'm sure you guys can manage to do that, and you'll see what I'm talking about. Anyway, right now, guys, it is a bear flag. You have to keep that in the back of your mind. We are still in a bear flag type formation. Next point above us, and I like it above 1300. There's a little bit of resistance up there at 1305, 1307, and then above that 1315 area, which we fought with forever back in this area here. So point being, we still have some work to do on the bull side to really reclaim this and maybe go to new highs or whatever the case is. But I want you guys to step back, take a bigger look at the charts, and notice we haven't really gone anywhere from a bull side. I mean, we've had 2 good days of some pushes up, but whoopee. I mean, this is what you see in an ABC type of correction, in a bear flag, in a bull flag, obviously reversed, but it's the same type of price action. Don't get fooled quite yet. What I'm saying is I can build you a bear case, I can build you a bull case, and either one of them, both of them at this point have credit. Just be careful with your trading. 1300 is not a bad speculative long at this point down here. I will certainly be watching that myself. Once again, if it can't beat it, it might gap it, so I might be looking for a gap above 1300 come the morning. Anyway, don't shake the idea here that the bulls are coming back with a vengeance. I saw a post by Tim that I wanted to opine on a little bit, and that was, it was funny how the market changed direction, and all of a sudden the bulls came out, and they're like, ha ha, we're right, here we go, blah, blah, blah. But he's right about that. You know what? Don't get too quick to change your bias, okay? This game of trading isn't about bears are right or the bulls are right. You can make it into that if you want to, because everybody loves competition. But if you want to really be a successful trader, you've got to be able to wear a bull hat and immediately change 3 seconds later to a bear hat, and just know when the setup's there, you take the setup. Who cares if you're bearish or bullish? It doesn't matter if you're right or wrong from a bear or bull standpoint. That makes no difference. We're not here to pick sides. We're here to make money. So changing your direction all of a sudden, here's one thing I don't like to hear from the trading world, and that is, oh, we're up too far. Or, oh, we're down too far. I heard that in through here, right? Down through this area here. Oh, we're down too far. I mean, look at how far we've come down. We have to bounce. No, we don't. We could have gone down to 1100 and not stopped. I mean, we saw it back in 2008, those heavy wave threes. Guys, there is no such thing in the trading world as up too far or down too far. That doesn't exist. Okay? We can be extended one way or the other. Not the same thing, but we can be extended. We're a little extended to the downside. We're a little extended to the upside. Yes, I'll agree with you there. But we're never up too far, down too far. And don't change your bias based on that. Oh, we're down too far. I'm going to get bullish. Oh, here we go, bullish. Well, hell, guys, how long did you sit around waiting for the market to go down? Now, all of a sudden, you get, 2, 3, 4, 5 days down in a row, and everybody wants to be a bull again. Oh, we got a bit bullish. Play the charts, okay? Right here, the chart is really on a daily time frame. It's in a bear flag until otherwise proven. It's a consolidation until otherwise shown. So don't change your bias just because we had one day up or one day down. All right, know how to read the charts. Learn how to listen to what this thing's telling you. Right now, it's a bear flag for the time being. So don't be spooked by that. We are seeing some pretty good strength out of the Russells in the NASDAQ. Yes, blah, blah, blah. I get it. However, let's just go back and do this. Let's go back to an NDX 60-minute. I can take this line, put it up here, and guess what I get? Oh yeah, something kind of like a bear flag. Well, until we break it, that's exactly what this is. It's kind of in a bear flag type motion. It looks strong, looks like we're going to break out and above the bear flag, but until that happens, it just is what it is. How about the Dow on a 60-minute? Let's go back to the 60-minute here. This one's in more of a flat, okay? Have we broken this overhead resistance yet? That would be no. So until and look how many times we hit it up here, and then the bears won again, straight back down. And then guess what? Everybody on this day was like, "Oh yeah, we're going down. Here we go, breaking into new lows." No, we're not. Look, we're right back into support. Wait for the breaks, guys. Wait for the breaks. Okay, VIX really. Oh man, I wasn't going to make it this long. Sorry, guys. Bear with me. VIX is at 19. I really, from a personal trading standpoint, I like to watch this thing above 19. If we can hold above 19 in the VIX, that usually means a little bit more caution coming in from the trading world, from the option standpoint as the premiums rise. So I really only pay attention to this if it'll stay in a sustained move above the 1920-ish range. So far we've been able to do that, and you can see even after today a huge drop, but point being we're still back above 1920, so the fear has not quite quelled itself in the markets quite yet. Back here is where it really starts to get a little bit more, okay, I feel more confident. I think that'll happen if we break those upper levels I was talking about on those other charts. I think we'll see the VIX drop pretty heavy from a weekly standpoint as well. Granted, we still got a few days left of this to go, so anything can happen because it is a weekly candle, but as it stands right now, this second today, you can see still above the 19 mark. This can be at 25, this could be at 15 by the end of the week. We don't know, but as it stands right now, the fact that it's still at 19 means there's still a little bit of in the markets. Okay, so once again, one more point for the bears, if you will. We're not out of the market. We're not out of the woods quite yet there. FAS 60-minute, obviously. If the market's going to go, the financials kind of have to go along. Here's that long consolidation. Here's that big move. If you're an FAS trader, I like it below this line. I like it above this line, which also clears the 200 period moving average. Something for you to be thinking about into tomorrow's trading. Here's that bigger look. If you guys want to get a little bit more speculative, you can try to trade this up and over 24, see if you can't get it back to 24.50. But really, my more conservative entries are above here and below there as we what? Consolidate. Yes, and notice this consolidation's happening on a low. It's not happening on a high, so you still got to give a point to the bears in that respect. Here it is from the FAZ. Gee, what does this thing look like? I'm not sure, but it kind of has the appearance of a bull flag. So until this is broken to the downside, it is a bull flag. And bull flags are, that's right, they're bullish. So until this thing gets broken to the downside, I still have to give credence to the bulls to the bulls on the well, how would I say that? Give it to the bulls on the bear side. There you go. I'm going to give it to the bulls on the bear ETF side. Okay, so there's still not as much strength as the bulls would like to see in the financial markets quite yet. Very, very evident. I really like the FAZ chart over the FAS chart. It's just, I think, a lot more clean for me. We have a very nice, well-defined channel here. Now, can we come all the way down into here and even below and still not break this? You bet. We've got a couple bucks to move here. So there's opportunities for trading within FAS and FAZ, depending on which one you're more prone to. But keep in mind what this is for the time being until we break down below here is a bull flag. From a daily, it's a little bit more ugly on here, but right now it doesn't look quite as nice from a daily standpoint because we are now closing below the 20 and the 200. So I always give the other side, which in this case would be the bulls, a chance to get this back up and above there, which would be the bears in the market. I know it's a inverse ETF. I get it, but anyway, bear with me. I always give it an extra day to get that thing back up and above some support or resistance that may have been broken recently. In this case, I'll give it another day to see if we can't sneak our way back above this line and get back above these moving averages. But I kind of like this thing back below 48. I don't think that's a bad trade. I think it's decent from a day trading standpoint. You'll want to watch very closely the 47.25-ish area, 46.50, and then the 46. These are all targets to the downside. Either take your profits or move your stops as necessary. Breaks back above 51. Me likey to the long side. I think that's a very, very good, strong, maybe a little bit more aggressive, but I tend to be that way at times. 51 above 51 bucks. You don't have to go in with a full position. Maybe take a 25% position. Keep your stops relatively tight and see if you can't get that sucker to run if we happen to clear 51. Otherwise, there's your trades for tomorrow. All right, I'm going to leave it at that. That'll do it for today. That was long enough. 16 minutes is probably more than most of you can bear to listen to me. I'll be back maybe even later tonight with another video. If not, definitely tomorrow with a couple. Just to keep things rolling for Tim so he doesn't have to do quite as much work while he's on vacation. And to keep the boards moving with activity. Take it easy, guys, and we'll see you again very soon.